Kaiser Family Foundation statistics indicate that since 2019, the price of medical insurance premiums has gone up 24%. Obviously, we've gone through an inflationary period, but let me repeat that. Since 2019, the price of medical insurance has gone up 24%, but the payroll deductions for employees has only increased 5%, which is a clear indication the employers are absorbing most of that price increase. This is probably not a surprise to those who've lived through this period, but what might be a surprise is that the medical insurance industry inflates the cost of medical services by 80 to 100%. That's why the Center for Medicare and Medicaid Services released their price transparency rule in January of 2021. Subsequent to that, our 117th and 118th legislature codified that as law. So now all medical service providers, hospitals, etc., and all insurance companies must publish both their insurance rates for medical services and their cash pay rates for medical services. That really goes to the heart of what we're talking about today, the heart of this episode. Why is there a need for a transparency law? You would think, up until the 1990s, insurance companies allocated 95% of their total revenue to pay claims. But since the 1990s, they've started getting engaged in more profit-taking. And they've done that. That's evolved over the years into what we now call high-deductible insurance plans. Deductible for insurance used to be, when I was young, it was $500. Of course, the dollar was worth a lot more then. But it was the premiums and the deductibles were very low. Today, the average silver plan, which is a middle-of-the-road plan, has a $5,000 or $6,000 deductible. How many of your employees can handle $5,000 or $6,000, not even considering the co-pays, the co-insurance? You not only have a copay when you go to see your primary care physician, if you spend a night in a hospital room, you're going to pay $300 to $500 out of pocket as a copay for that hospital. So that's one of the main reasons with traditional insurance. You never know what the bill is going to be when you go through a major medical event until that bill hits your mailbox. There are just too many variables. If you evaluate next generation healthcare benefits, you'll see that's not the case. With medical cost sharing, there's an initial small conservative out-of-pocket amount that varies depending on the type of membership you choose. And after you pay that amount, it might be $1,000, might be $1,500 for a major medical event. You are reimbursed for all of the expenses. This cash pay industry has evolved and developed to where, I like to say cash pay healthcare without spending your own cash, because you don't have to spend your own cash to be a cash pay patient. You don't have to have, nobody's got that much cash. But the industry has wrapped themselves around this whole concept. And let's face it, it's just logical. If the insurance industry is going to inflate costs by 80 to 100%, let's bypass the insurance industry and provide consumers with the resources necessary to go straight to the providers without the insurance company being involved. And you know what? The providers like that too, because they don't like dealing with the insurance industry either.